Welcome back. I am still sitting with Varun, and now we are going to talk all about how you should invest in small caps from here. If someone is getting in now, I will also ask you about your own investments. But when the NFO was in process, I remember you saying that maybe you can put in some amount lump sum because the market has corrected a lot, maybe 50%, and the rest can be staggered as an SIP.
Yes.
Do you think even now that is the correct approach? Or do you think you should just, put in the cash that you have in the coming few months?
Yeah. So, like we said, 50% now and 50% during the course of the year. I think that advice still holds.
Okay.
Because like I said, every 4 or 5 years, we have that big correction. While it's good to have a foothold, but there could be a lot of geopolitical factors, US related factors, because of which there could be further volatility down the road. So between now and the end of the year, so you could 50% now and 50% through the SIPs for the rest of the year. I think that still continues to be the recommendation. And I think, so calendar year 25 is the year when you do the hard work, you put the money to work in a staggered way.
Is that what you've done as well?
Yeah.
I'm going to ask you for your portfolio after this.
Yeah.
Just check. But tell me, is that how you have gone about it? Not just for this fund, across portfolios, and also how heavily exposed are you to small caps? And this is not about the skin in the game rule. I'm talking just otherwise.
So I think, so let me just, share my own investment journey. So I have, I think 90% of my investments in equity.
Okay.
Right. There is only one fixed income that I have, which is called Sukanya Samriddhi, which is a Government of India scheme for kids.
Yeah.
And I have a 7-year-old daughter.
Yeah.
And I opened that account for us, which is, I think, good 7.5-8% tax free. And the kid gets it when she's 18 or 20, something like that. So that is the only debt investment that I have, and maybe a little bit of 6 months of expenses in a bank fixed deposit.
Yeah.
Other than that, I think almost all of it is in equity, and
heavily exposed to small caps.
So what
I know I am. So.
No, absolutely. So like I said, I'm a big believer of the power of compounding of small caps.
Yeah.
So I have small cap for myself, right, and specifically for my daughter, I do a monthly SIP. Right, and in the small cap space, so which I know she's 7, it's good 10-11 years for her to go to college before she needs money. So that should be sizable by the time she's graduating. And of course, I do other diversified funds and equity, so that adds to the overall equity book. And there are, as you know, a lot of regulatory requirements. So a part of our salary always goes for the funds that I manage. So a part of my salary goes for flexi cap and the small cap.
You were mentioning your daughter. She's just 7 years old. I think, when people have young kids, this is the best time that you can invest in small caps. A lot of people, just because of the name, tend to look at solution-oriented funds. There's nothing wrong with that. If you're not disciplined, I think you definitely should go for that.
Yeah.
But do you think for this kind of, say someone has a child around your age, you think small caps are definitely the way to go if you can guarantee that you're going to be disciplined and not pull out?
Yeah. So I think we have to split our requirement in 3 buckets.
Yeah.
Something that you need for the next 12 months or something that could be needed in case of an emergency. You put it aside, put it in the most liquid asset. The second is what we call the medium term, which is 1 year to 5 year, where probably you put money in, let's say, a diversified equity fund, which will give you good compounding, but comes with a moderate risk.
Yeah.
And third bucket is what I call 5-year plus, which is where the investment for my daughter fits in, which is the most aggressive, where I know even if I have a 30% drawdown, I'll be okay because I don't need the money upfront. And that is, predominantly my investment in that bucket goes in the small cap space.
No, I'm 100% with you on that. I think anyone that's looking for their child's education, which is usually something that you plan for, way in advance. I'm not a parent, but I still feel like I know this. I think, you should definitely need to be aggressive in that pocket because you will bear the fruit of that. Now, I'm going to talk about your journey as a fund manager. Tell me the worst and best part of investing in small caps.
Yeah, so I think the best part, I would say, the two actually for me. One is there is the intellectual challenge.
Yeah.
Right. So you feel that happiness or the bliss.
Yeah.
Honestly,
that I got this right.
Got this one right.
Yeah.
Right. So it's something which challenges you. And a lot of times when you see something becoming 3x, 5x, 10x of what you had started investing, it's a great feeling.
Yeah.
Right. So that's one. Secondly, there's also, the volatility. That's a challenge. In fact, a lot of times, this is a good idea for long term, but it is down 40%, 50%. And then you start doubting your investment hypothesis. So the doubts and the stress also comes along with that,
It's much higher.
It's much higher. So you have to be more confident. Of course, you will go wrong. And therefore, when you comes to small cap, never have only one or two. You have a basket, because even if you get a few wrong, and things happen, sometimes regulation change, sometimes government policies change, sometimes the environment of the sector change, and sometimes you genuinely make mistakes, right? So that's why we make a diversified portfolio, right? So I think all those things come into mind, and but the thrill and the excitement, every time you're studying something new. And for me also, the second benefit is that you tend to meet such dynamic entrepreneurs and hear out their journeys. And when they talk about, look, this is how I started, and and how he struggled, and then he or she struggled, and how they build that thing. So I love that story. And so those both things combined, give me a lot of happiness.
I mean, in that way, you just cannot compare it to a large cap kind of investment, which are much more discovered ideas, I would say. I mean, there isn't that kind of scope, right, in the large cap.
So there is more predictability, let me put it this way. So, but here there is going to be more volatility, and you better be prepared for that.
Varun, it's so nice to see you speak with this much excitement about small cap investing. I know you've been doing this a long time, but you're still so excited about it.
Absolutely.
But tell me, 17 years in the market, 17 years investing. 18 years now investing. What is your top lesson from the market?
The top lesson, honestly, is that be ready to change. Either you change yourself, or market will teach you the hard way, right? So what was the winning ideas or winning themes in 2007 is very different from what it was in 2017. And that is very different from what it is in 2025. So let me give you an example. Between 2011 and 2020, right? So I was managing a lot of funds, multi-cap funds, flexi-cap funds. And, there was a very simple trick. You had 3-4 banking ideas, 2-3 IT, 2-3 pharma, and a little bit of auto. And you could safely ignore the rest of the economy.
It would just not work today.
And you would always outperform, right? And whoever had more diversified funds would struggle. And we've seen that. And now, post-COVID, things have just flipped. And what is happening is now the economy, so many other sectors of the economy are doing well.
There's so many new sectors.
There was new sectors. There was no EMS or manufacturing in India. There was no defense sector. The capital goods cycle, power cycle was dead for 10 years. Real estate cycle was dead, right? So suddenly all these sectors are back. Today, when you construct a portfolio, you have to be cognizant that the portfolio has to be much more diversified. Probably the number of stocks have increased. In fact, when I look at myself, I would have made a more concentrated portfolio earlier, but I make it a much more diversified portfolio now. So I think so again, coming back to what is the learning? Change with how things are changing, and don't be rigid in your way of thinking.
Okay, I think I'm going to remember that. That is great advice for anyone that also invests by themselves, or is, just listening to how you would like to invest in the small cap fund. Thank you for joining us.
Thank you so much for
this chat. And I hope this helps all of our investors.
Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.